Hi friends, very good evening. In this video, I'll be continuing my last discussion on income tax advantages which are available under various sections to salaried employees. So today we'll be talking about income from other sources which employees sometimes receive. Most important head in this is income from house property. Now, as you can imagine, all of us either have our own houses or rented accommodation which we stay. So how does the income tax act give us benefits under various sections in this particular case? First of all, what is property? Property could mean commercial or residential, and the law is same for both. You need to be the legal owner of the property, and either it should be self-occupied, let out, or maybe inherited. Now, coming to the calculation of income from properties, how is it done? Firstly, we calculate the gross annual value of the property, which means the rent which you receive from the property. For example, there'll be a rental income from a property which you'll be receiving. So from that, you reduce the property tax which you have to pay, the MCD taxes or whatever. Then you will get 30% standard deduction, which means for repairs and maintenance of the property. Then you can reduce the home loan interest which you pay on the property. After that, whatever is there will be taxed as per your tax slab. All right, till now it's clear. Now we move to what are the deductions available on in case of house properties. So firstly, tax deduction on home loan, which is, for example, if you've taken a loan, is covered under section 24 of the Income Tax Act. So up to 2 lakh rupees home loan interest in any particular year you can claim as a deduction. It's immaterial whether the house is vacant or rented, doesn't make any difference. Number two, to do this, you need to have two conditions. Firstly, in fact, the value reduces in case the loan amount is after 1st April 2000, sorry, I beg your pardon, 1999, and if the property is not completed for, let's say, more than 5 years, then you can only claim 30,000 rupees deduction and not 2 lakh rupees. So this needs to be carefully kept in mind. Next is tax deduction on principal repayment under section 80C. So under 80C, which you get 1.5 lakhs, you can claim the amount which you have paid as principal of your loan. That can also be claimed as a deduction. So, but for this, the condition is that the loan should be on the new property and the property should not have been sold for more than sold in last 5 years. So that's important thing. And the amount which you can claim will obviously be restricted to the ATC, which is 1.5 lakh bracket. Okay, now for first time home owners, a new section called 80EE has been introduced. And of course, something on similar lines for affordable housing is also there, where you can claim additional deduction of rupees 50,000 every year, which is an added advantage apart from the standard deductions which are available. Now, how to claim deductions is very important. We need to understand that the property should be in your name, and there should be claim should be only in the year of completion of the property. Home loan certificate should be ready in case you are an employee to your employer. But if you're not a employee, maybe you're a freelancer, then you can keep things ready in case the IT department has any query. Okay. Now, the same benefit can also be there if you're a joint owner. So you can claim similar benefits. But number one, you need to be a co-owner. Number two, you need to be co-borrower of the loan to claim these benefits. And last but not the least, even if you're claiming HRA, which I explained earlier in my previous PPT, you can also do the same and claim interest on housing loan as deduction. So both can be claimed in any particular financial year. So as you see, these are various important benefits which are available, which sometimes we are not aware, but are of great help in saving our taxes. Thank you very much for watching this video.